Are you looking to diversify your investment portfolio? Discover the power of bonds and how they can boost your financial growth in today's video. Hi, and welcome back to Money Matters, your trusted all-inclusive channel for making finance easy and covering everything you should know about making your money work for you. But before we get to the bonds, if you're new here, don't forget to hit that subscribe button and ring the bell to stay updated with all our latest content. And if you find this video helpful, be sure to give it a thumbs up. Also, don't forget to share this video with someone who also could benefit from this info, so they stay updated as well. Now let's get started. All right, folks, let's dive into bonds. We're gonna break down what these bad boys are and the varieties they come in. We'll also chat about why some investors have a thing for bonds and some troubles they might face. And hey, we won't stop there. We'll compare bonds to other investments and wrap up with some valuable tips for those itching to dip their toes in the bond market. By the end, you'll be well equipped to navigate the bond universe. Ready? Let's jump in. What are bonds? So let's dive into bonds. Ever heard of them? Think of bonds as a sort of IOU. When you buy one, you're lending money either to the government or a company. In return, they agree to pay you back with some interest. Sounds like a decent deal, right? But here's the thing. Bonds come in different types. There are government bonds backed by the government. Then there are municipal bonds linked to local governments. And of course, corporate bonds, where you're investing in companies. Each type has its own set of characteristics, so it's about finding what fits your investment goals. Take a moment. Ever considered which bond type aligns with your investment strategy? Now that we've covered the basics of bonds, let's explore why they might be a valuable addition to your portfolio. Why invest in bonds? So you might be thinking, why should I even toss my money into bonds? Well, let's break it down. First off, bonds are like that steady friend who's always got your back. They're stable, especially when you compare them to the wild roller coaster of stocks. No dramatic drops or sky-high jumps, just a smooth ride. And here's the cherry on top, regular interest income. Imagine getting a little thank you note in the form of cash, just for lending out your money. Sounds good, right? But wait, there's more. Bonds are like the secret sauce in a well-cooked meal. They add that diversification to your portfolio, ensuring you're not putting all your eggs in one basket. Picture your portfolio. Is it all stocks and no bonds? Think about the balance. Now I know what you're thinking. Bonds sound great, but there's gotta be a catch, right? Let's talk risks. Risks associated with bonds. Every investment has its risks, and bonds are no exception. First up, we've got the interest rate risk. When you invest in bonds, you're locking in at a certain interest rate. But here's the catch. If interest rates in the market rise after you've made your purchase, you're stuck with your bond's lower rate. It's like signing a lease for an apartment, and then the one next door gets listed for cheaper. You're committed, and there's not much you can do about it. Next, there's credit or default risk. This is the scary thought that the entity you lent money to might just, well, not pay you back. It's like lending money to that one friend who's notorious for forgetting to return it. Inflation risk? Oh, it's a sneaky one. Picture this. You're getting a fixed interest from your bond, but inflation is rising faster. It's like getting a raise, but everything's become more expensive. Not the best feeling, right? Lastly, reinvestment risk. This is when your bond matures and you're left scratching your head, wondering where to reinvest because the rates just aren't as good. Think about these risks. Are you comfortable with them? Every investment has its ups and downs, but hey, it's not all gloom and doom. Let's flip the coin and look at the brighter side of bonds. How to choose the right bonds. Choosing the right bonds for your portfolio isn't just about picking any bond and hoping for the best. It's an art, a science, and a bit of intuition. Let's break down the factors you should consider. Yield. This represents the return you'll get from the bond. A higher yield might seem attractive, but remember, it often comes with higher risk. Maturity. How long until the bond matures? Short term, medium term, or long term? Your choice should align with your investment horizon. Credit rating. Bonds are rated based on their creditworthiness. AAA is top-notch, while anything below BBB is considered junk. Know the risks associated with each rating. Importance of diversification within the bond segment. You've heard it before, don't put all your eggs in one basket. The same principle applies to bonds. Diversifying across different types of bonds and maturities can help spread risk. It's like having a mix of different fruits in your basket. If one goes bad, the others are still good. Take a moment. Are you diversified enough in your bond investments? Are you considering all the essential factors? Bonds are a solid choice, but how do they stack up against other investments? Let's compare. Bonds versus other investments. When it comes to investing, bonds are just one piece of the puzzle. Let's see how they compare to other popular investment vehicles. Bonds versus stocks. While stocks offer potentially higher returns, they come with higher volatility. Bonds, on the other hand, provide more stability and predictable income, making them a safer bet during economic downturns. Bonds versus real estate. Real estate can be a tangible asset that might appreciate over time, but it requires significant capital and isn't as liquid as bonds. Bonds offer liquidity and regular interest payments, which real estate might not provide unless it's a rental property. Bonds in a balanced investment strategy. Think of bonds as the defensive players in your investment team. They might not score the most points, but they provide stability and protection, especially when the market gets rough. Consider your current portfolio. Do you have the right balance between bonds and other investments to meet your financial goals and risk tolerance? Now that we've compared bonds to other investments, let's dive into some practical tips for bond investors. Practical tips for bond investors. Investing in bonds requires a strategic approach, just like any other investment. Here are some actionable tips to guide you. Research and due diligence. Before diving in, understand the bond's issuer, its credit rating, and the economic environment. Knowledge is power, and in the world of bonds, it's your best defense against potential pitfalls. Consider bond funds or ETFs. If you're not keen on picking individual bonds, bond funds or ETFs can offer diversification. They pool together various bonds, spreading the risk and potentially offering a more stable return. I also made a video on ETFs that should pop up at the top right corner if you're interested. Stay updated. The bond market, like all financial markets, is influenced by economic trends, especially interest rates. Keep an eye on central bank decisions and global economic indicators to make informed decisions. Take a moment to evaluate your current bond investments. Are you diversified enough? Are you staying updated with the latest market trends? We've covered a lot about bonds, but let's wrap things up with a conclusion and some final thoughts on the importance of bonds in a diversified portfolio. Ready for the conclusion? I mean, it's not like you have much of a choice, except for maybe closing the video and watching something else. Anyways, let's move on. Conclusion. Bonds play a pivotal role in the financial world. They offer a sense of stability, especially during turbulent market conditions, and can be a reliable source of income. Whether you're a seasoned investor or just starting out, understanding the nuances of bonds is crucial. They can act as a counterbalance to the more volatile elements of your portfolio, like stocks. Remember, every investment comes with its own set of risks and rewards. It's essential to assess your own financial goals, risk tolerance, and investment horizon. Bonds, with their diverse range, can fit into various investment strategies, offering both safety and growth potential. Wrapping up, we hope you found this video on bonds helpful. If you did, think about someone who might also benefit from this info. As you see, financial knowledge is of critical importance, especially in today's world. After all, we don't have our name for nothing. Money does matter. If you got someone, share it with them so they don't miss out. We'd love to hear your thoughts, so feel free to leave a comment below. If there's any topics you'd like to know more about, be sure to drop them in the comments. Your feedback helps us create content that serves your needs. Don't forget to like, comment, and subscribe to stay updated with all our latest videos. We have a lot more informative and exciting content planned for you. And that's all for today. Thank you for watching and investing your time with us. We hope to see you again next week here at Money Matters, because your money matters.